Sifuna, in fact, Palela Nani, that is going to be mentioned, that has been mentioned actually at this point. Who is investing and how much are they investing in the province? Got a guess as I jonga lonto ezba inqubo ihamba. But for now, we are going to be starting our conversation. Benchiloke into kubana sabisinaye ke yena ke Chumani Nobongoza, and he's the founder and business consultant at Requisite, and sabesincokola ke malunga nomcimbi we business ratios. Chumani mandikubulise nkwamkele nkqubeni. Thank you so much for being with us today.
Dibulise Thandisa, dibulise nabaphulaphuli. Thank you very much for the opportunity.
All right. Namhlanje ke bethuna ndichilo basi zabe sitha ngalo mcimbi we business ratios, and mhlawumbi get to start off, would you explain to us by into lento business ratios, because sometimes you'll find that entrepreneurs as khona izinto ezingathi zingazincedisa, but because azizazi kahle uba zisebenza kanjani, or they've never even heard of it, okay, they've been hearing it but umuntu aqonde hayi wethu lento business ratios ngayaziyo. What exactly is it about? So can you take us through what are business ratios?
So business ratios, also known as financial ratios, it's an accounting ratio and is a relative magnitude of two selected numerical values that are taken from an enterprise's financial statement and then are often used in accounting. So simply put, these are financial indicators which are meant to keep track of the financial health of your business.
Basically, zizinto ezikuncedisayo ukuba ubone into bana what is the health of your finances. It's so interesting 100%. That it's something that does not come through a lot, because really it really doesn't come through a lot. It's not something especially even around the circle of businesses. And it makes me wonder ubana when businesses don't know about it but moving on to something else, I think it's also very much crucial that we also look at why is it important for e-businesses to understand financial ratios. I think let's look at that part as well. But why is it important for businesses to understand financial ratios?
So your financial ratios, they offer business owners and entrepreneurs a way to evaluate a company's performance and also compare that to similar businesses within the industry. Just to put it in a simple way.
Okay. So if a company does not even understand, or a business doesn't even understand the business ratios, does it mean that analyze the finances zakhe, is the person just going customers zatenga dithengisile service yam dithengisile my products, and that's just because if you don't do the assessment and you don't evaluate the performance of your business at a financial level, dependent when you
So with every business, you obviously have a balance sheet.
Okay.
You have your income statement, profit and loss statement. So those, a total of those numbers for each of those statements would then be compared against each other. Okay. And that's where then your financial ratios come into play. Remember, it's you are comparing two different sets of numbers from different statements to get to a financial ratio. Yes.
All right. It's quite interesting. And I don't know, do you think that the reason why you find that e-businesses don't necessarily get into a space of understanding e-financial ratios, is it because it's complicated? I mean, if you're saying it's just comparing numbers, do you think businesses have a perception of it's complicated,
I would say accounting in itself is deemed to be complicated. Okay. It's a complicated subject, because I also remember in high school I used to struggle with accounting. Accounting is only simple for those who have the brain for your accounting, and it's mostly the left side of your brain. That's the side of the brain that deals with the numbers.
Okay.
Yes, according to certain theories. And then the right side of your brain is the more creative side.
Okay.
Yes. So generally speaking, accounting is a tough subject. It's a horrific subject for a lot of people, which goes then to what you just said, that business owners will hardly speak or touch on financial ratios because it's quite scary.
Okay.
And then you obviously, in the growth of your business, you will obviously get to a point where you will need the assistance of an accountant, qualified accountant, who will then take over that responsibility. And then you, as the business owner, as the entrepreneur, you can just focus on running the business and on other aspects of the business. Because remember, the mere fact that you are in business, one can assume that you are in a business that you are passionate about, that you love. So now if there's this aspect of accounting, which is very important, by the way, you can't ignore it. But now if ngoku iyakoyikisa, it's giving you sleepless nights, you're not going to be a happy entrepreneur. You're not going to be a happy business owner. When stress, then depression obviously might also kick in. So that's where accountants come in, auditors. They then will take over and then sort that important part of your business for you.
But I think, you know what, I think like I didn't really know about the differences in the sides of the brain. That aspect is new for me. And what is interesting for me, as you are saying it, is that how you entrepreneur you bend more towards the creative side.
Exactly.
So it's like you love the creative side, and in time it becomes easier, but for the business to function and to survive, accounting, because business is about numbers most essential. There's a lot of different things that you have to take care of in the business, but numbers are so much important. The accounting side is so much important.
Definitely.
You might find yourself running a business into the ground, and it's because of you are literally lacking. And I think it's beautiful what you're saying, that when it comes to if it's such a struggle, which is a reality, it can be a struggle, then you can be able to make use of the accountants and auditors, who you saying trained, but
yes, exactly.
But they can understand it better. I think also when it comes to ratios, decisions, the company that you make, can you be able to make proper decisions, proper financial decisions, company yako, if you don't have the information that could be brought by analysis? Ratios
and the numbers. So there is a school of thought that believes that cash is the lifeblood of the business. So according to this school of thought, to them it would be a very big mistake to make any type of financial decision without studying your business's financial ratio, especially if these decisions will have long-term ramifications on your business. So you are almost in a situation where you need to wear two hats. On one hand, you need to think like an entrepreneur. That is where now the right side of the brain will kick in. That is where the creativity comes in. Other people work best under pressure. Earlier on, a while back when I was on the show, I differentiated between a business owner and an entrepreneur, if you remember.
Yes.
And I gave you an example. So today I'm going to give you another example of an entrepreneur, someone like Unkosana Makate, who invented Please Call Me. So even if he sees himself as a business owner, but that particular move and that invention was more entrepreneurial than anything else, because before he came up with that idea, there was no Please Call Me. So you just either had to have airtime, or you just had to wait, or maybe write a letter. Then now all of a sudden he comes with the idea. Now you can get someone's attention by sending a Please Call Me. Understand? So that's more the entrepreneurial side of things. So back to your question, finances are very important. You can never underestimate the importance of maintaining high liquidity and ensuring that you are planning for the long term. Yeah.
I think it's very much important, and as you are, touching on Linda by cash, having a cash. Really, some businesses, they, if you don't monitor whether
Yes.
or not, you do have a cash flow right in your business, you might find yourself with assets and but
Yes.
function, operate because you don't have a cash. And I'm be looking at, as well about okay, these different kinds of ratios that get to be analyzed and assessed. You can touch on one or two or a couple so that azoba ne idea pull up of what type of ratios are there and the kinds that one could look into a business in yak.
Okay, so because we are in an environment where your central banks are raising interest rates to fight inflation, because you remember what happened with COVID, countries were forced to release money into the different economies to stimulate the economies, because no one really knew what this COVID thing was going to look like and how long it would last.
Sure.
So obviously now once you stimulate the economy and you put more money into supply, you run the risk of increasing inflation, which is the current challenge at the moment. Hence, you are having, like I said, central banks all over the world. I think the last interest rate hike for us, South Africa, was 75 basis points by Governor Lesesha Kganyago, excuse my pronunciation. The same was with Jerome Powell at the Fed America. So let me give you examples of liquidity ratios today, because I think it matches the current climate of what is currently going on. So the first ratio that one would need to look at would be your current ratio, which is also known as your working capital ratio.
Okay.
So it estimates the ability of the business to pay short-term obligations.
Okay.
Now, in other words, these are liabilities and debts that are due within 1 year, within 12 months.
Okay.
Now, how you calculate this is, so it would be your current assets divided by your current liabilities.
Okay.
So ideally, your current ratio should be greater than 1.
Okay.
Meaning that your business can settle every rand owed for payables, accrued expenses, and short-term debts with your existing current assets. Okay, so let me touch on accrued expenses, right? So this is a charge or a cost relating to work done, but not yet invoiced. Okay, so you made provision for at the end of the financial year.
Sure.
Of the period. And so it's recorded now, but paid later. So an example of an accrued expense would be bonuses.
Okay.
So your staff must, that towards the end of the year, you'd need to pay them bonuses, but you make provision for that at maybe the beginning of the financial year. All right. Then your current assets, this would be physical cash and other assets expected to be converted into cash within a year. Yes, within 12 months. So this would be stock inventory, for example. So that would now make up your current ratio.
Okay.
Right? Then your second ratio would be the quick ratio.
Okay.
Which is also known as your acid test ratio.
Okay.
Right?
Acid test.
Acid test ratio, yes. It's similar to the current ratio in that it's a gauge of your business's ability to pay debts. However, it looks at only the company's most liquid assets.
Okay.
So this would be physical cash, marketable securities, and accounts receivables. So rather than all current assets,
sure.
as compared to the current ratio. It excludes prepaid expenses because you can't use those to pay other short-term liabilities, and it also excludes the inventory, right? Because it could take a bit longer to convert your inventory to cash. Yes. So your quick ratio, how you calculate that, it would be cash, physical cash, plus cash equivalents,
Okay.
plus marketable securities. You add your accounts receivables, you divide that by your current liabilities. Right? Sounds like a mouthful, but obviously for an accountant, once you are able to afford an accountant, they will definitely then simplify the process for you. So I think the point for today is just to highlight what these ratios are, especially as the liquidity that I'm touching on, and how you would calculate them. Because as a business owner, you also need to have an idea.
An understanding.
Yes.
Yeah, to be high level.
Then the technical people, your accountants, will then look at the nitty-gritty and the details of it.
Another question that is coming to mind right now, into okubana, also, does it mean into okubana kufuneka ngiqale ndilinde and become like a big business before I start understanding business ratios? I know financial ratios, and I know
Yes.
into okubana, there's also into okubana, actually, what does big mean? Because it could also be relative to a person and to, your definition of it. But let me
Yes.
put it like that and say,
Okay.
do I have to wait dilinde qale hayi business yami ibe nkulu, and then I can be able to just open my ears more to understanding business ratios, financial ratios that apply in a business?
Yes.
Okanye it's for all of us, no kuphi level now.
Yeah, that is a good question. So the sooner the business starts analyzing the financial ratios, the better. So I would compare this to raising a child. You
Okay.
want to teach your child good habits, like saying please and thank you at a
Okay.
young age. Because you are, as a parent, you are playing it safe, because it might be a bit more difficult to try and instill these good habits at a later stage.
Sure.
So rather start business
As soon as possible.
as soon as possible, and then get into that habit, so that by the time you enter the growth phase of your business, it's almost like second nature.
Okay.
Into your calculator, your financial ratios, and basing your future strategy on
Information that you have received.
that you can withdraw from as a ratios. Yeah.
So, Mhlambi, if a business, I heard you talking about two statements earlier on.
Yes.
The balance sheet, the statement of income and loss. Balance sheet. Say balance sheet. What's the other word? Financial position, statement of financial
Yes.
position, and then
Yes.
income statement, chinchilates, and statement of profit and loss. But
Exactly.
you get it.
It just depends where you are in the value chain. Yeah.
Okay,
Yeah.
so as new businesses don't even have those basics, because I feel like it means that is where you can start as well. Just
Yes.
having a presentation of your financial matters, the balance in statements. So
Yes.
now when you're talking ratios, uthatha information mosipha, and you try and
Exactly.
analyze it further. So umntu omamele who doesn't even have anything, mhlawumbi,
Okay.
the only thing they monitor, I don't know how entrepreneurs business owners do this. The only thing anayo nje yilaa nto how much money is getting in.
Yes.
And then I need to pay that, I need to pay that, I need to pay that. How would they start this process, at a practical level? Mhlawumbi ungaba-advise uba umntu angaqala kanjani, umntu ongenayo naloo practice of
Yes.
keeping books at a basic level.
I like that you touched on that, because the fact that entrepreneurs are already itemizing income and noting what is coming into the business, that
The
is
process
a
has
step
started.
in the right
Sure,
direction.
sure,
The process
okay.
has started. Because remember, an accountant, once you get to a point where you can afford one, they will be looking for a record of what money has come into the business, what are the sources of the money, and what have you spent the money on. So you'll notice that a lot of entrepreneurs and even employees in different companies, they will keep track of their expenditure.
Okay.
Fuel expenses, money spent on lunches, airtime. That is a step in the right direction. That's how you start.
Okay.
Then from there you build.
Okay.
So the fact that, like you said, you've got entrepreneurs that don't necessarily have a formal system in place, but the fact that they are itemizing,
Okay.
that's the word I will use, itemizing movement, mali within the business, that is a good starting point without complicating it, because you will get to a point where it needs to be complicated, because your long-term strategy will depend on how you analyze the numbers and the conclusions that you draw from those numbers.
All right. As we're going towards the close, manphinde ndithi ke mhlawumbi what further information can people look for around ratios, okanye where and how does an entrepreneur, business person, a business owner continue to empower themselves around business ratios? Advisor uthi umntu makenze njani na, just to get more information, more exposure. How can they also assist themselves in that regard?
So I know that with one of the clients that I work closely with, they were able to get assistance from a funding agency,
Okay.
right? So the funding agency, part of their responsibility is to at least give you the basics.
Okay.
In terms of tracking cash flow, expenditure, income. I know that he's busy with the process, so now he's at a stage now where he needs now an accountant to come on board to take him to the next step.
Okay.
So a funding agency would be a good place to start. Then if you have the time and you have the money, there are short courses that one can do.
Okay.
I remember when I was getting my accreditation to work now as a business consultant, before I even started my own business, I had to go through a module called Financing a New Venture, Entrepreneurial Profile, and I just forget the third module, but this was offered through Services CETA.
Okay.
So there's different options depending on where you are in the stage of the business, how much time you have. Let's say maybe you're running the business for 8-9 hours during the day. Then maybe in the evenings you can spend an hour or two just familiarizing yourself now with just the basics.
Okay.
So if it's not a funding agency, it will be an agency or an organization such as Services CETA.
Sure.
And then obviously there's consultants, people like myself. There are accountants that one can maybe speak to. And remember, the way you position yourself and your business, you don't necessarily have to always be thinking that you are going to be spending money.
Okay.
If you talk to people, you can get to an arrangement where to say, listen, this is the help that I need now. I don't have the money to pay you at this very
stage.
moment. Let's look at it at a later stage.
All right.
There's many ways to go about it, but the point is that that school of thought that says cash is the lifeblood of the business, you can't overlook that.
Interesting. Can you also give us your contact number in case someone
Yes.
wants to continue this conversation with you, through requisite, offline, or whatever? How do we get a hold of you?
100%. So with calls and WhatsApp, I am on 068 543 8272. So that's 068 543 8272. Then on email, it's Chumani without an H, so it's CUMANI @requisitesba.co.za.
Thank you so much for your time.
Nkosi sisi.
Siyabulela kakhulu. I can pull up with Vugani Community Radio. That was Chumani Nobongoza from Requisite talking to us about a business ratios. When we come back from the song, we are going to be touching more on some of the points that